Hi there, traders. This is Brad Gilbert with the weekly kickoff. It's Monday, the 25th of March. All right, now the key thing to be watching out for, the dollar strengthens after big shift in global rate outlook, right? We've been waiting for this for some time. And what I'm talking about is it's the shift in sentiment from all the other central banks, right? We have been focusing very clearly on the Fed, but you know what? The US numbers have been they're not really connecting, right? We're not getting all weak numbers. We're not getting all super strong numbers. So we got the Fed sort of in a holding pattern. But what we are seeing now is the other central banks, they are coming to the party. The Bank of England talking about rate cuts are on the table. The Swiss have had a surprise cut. Japanese, well, they had a slight rise, but that was sort of well predicted. So that's sort of by the by. But what we are seeing with that shift in rate outlooks, right? So you're going to be thinking all the other central banks are looking to cut rates to get sort of global growth happening. The Fed, well, they're sitting pat. So the dollar, what it does is it rallies against everything else, right? Just like not for being dollar strong, but for everything being weak, okay? And this creates a huge amount of opportunities as we go into this last week of the month. Now, traditionally, the last week of the month, well, it's a little bit stagnant. You get some sideways trading markets. But with the fact that the global markets and the dollar has, like euros, just been shoved down to 108, and the dollar index obviously up, it creates opportunities around the numbers because when the central banks start to go from like a neutral phase to either a cutting or a hiking phase, the data becomes super important. And what that means, it becomes very reactive and traders will watch it a lot further. So as we come into Monday's trading, you want to be having a close look at the calendar and working out where the key sort of events are. Now, this is the second tier and top tier numbers. Now, the top tier numbers, like the durable goods, are highlighted here in red around the time. So keep an eye on these because these are the numbers that can really kick things off. But more importantly, don't forget the second tier numbers, right? The S&P Case-Shiller numbers, the consumer confidence numbers in the States, very important. Tuesday, we've got a great chance to have a look to see if this dollar move right up continues, and that'll drive euro, sterling, Aussie, Kiwi down. If these numbers are strong, we've got a new sort of dollar sentiment and a strong dollar just on the basis of the other central banks shifting their rate outlooks, right? And that's this is exciting, right? So don't think there's not many trading opportunities. The data now becomes a focal point. Overlay the numbers. What we're looking for is anything non-US, okay? All these numbers here, if they're weak, it goes with the current trend and the current sort of the new global rate outlook, right? So that's what we're sort of really key on. I'm focusing on. Now, where this gets really interesting is if the bigger US numbers start to come in weak, well, that's actually a good thing for us as well, because what we will see, I can just get off that pen there, is a correction across the board around the numbers. We see weak US numbers. We see an automatic correction here on a lot of these on a lot of these moves, right? So there's moves there for weak dollar numbers. There's also moves here for strong dollar numbers. So just roll with the momentum. Directions, we have direction, right? So just be aware that you can actually sort of get a little bit aggressive with some of these releases. And the best thing is they aren't like the non-farm payrolls where the market completely discombobulates. You get hammered on spreads, on volatility, price gapping, and all these sorts of things. You're not going to see it from these numbers. Okay, so make sure you scroll through the calendar. Friday is the key day, right? Inflation obviously being the key to it. The PCE price index, a key number the Federal Reserve looks at. Then you also got personal income, personal spending. But in amongst this, during the week, we do have a lot of second tier US numbers that are going to give us a lot of answers around the US dollar. Okay, so just be aware of that. If these numbers, as I said, come in weak, well, the dollar's going to correct and we get the sort of seesaw movements that you can really take advantage of. Now, don't just run into the numbers and just trade them for the hell of it. Make sure they connect with connect with the dots, right? The durable goods numbers here, previously minus 6.1 month on month. The consensus is +1. It gives you a load of room for if these numbers are really weak, and like we see, and I'm expecting a shift in the US numbers to weaker numbers. So if we start to see that, then we get an unwind of this current move, and there's going to be cash there, right? You just need to know where to get in and what time to be looking at the markets. And that's what the calendar does for us. Okay, guys, well, I don't want to sort of bore you to tears too much. The markets are active. This shift in the global rate outlook is a really good thing. So make sure you tune in. Just wait for the good opportunities. Don't just rush in, is what I was going to say. And just make sure you connect the dots with what is actually happening in the market. And that's one way to really cherry pick the best trading opportunities. To start with, we're seeing a bit of a risk-off situation in the equity markets. It's not really transpiring yet across the currencies. It's probably too early doors at this stage at the start of the Asian session. But active week, lots of opportunities. Follow the momentum of the data and connect the dots with the direction on your charts. All right, guys, have a good one. Cheerio.